Hey, Eric here from 5minuteinvesting.com. And in this video, I want to talk about how you can identify the trend even if you're only half awake. Now, in the previous video, I talked about how you can use the 45-degree rule. So if you see the price from the left bottom corner to the right upper corner, then that's an uptrend. Super simple. You can teach it to your 3-year-old and they'll understand it as well. But in this video, before I start, I want you to understand the big picture. Like I always do, there are only 3 steps in investing, which is 1, find a great company. 2, buy it at a discount. And 3, use stock options to multiply your return. That's it. Nothing too crazy. Super simple. So, how do you identify the trend when you're half awake? Now, if you started with the first video or the first email, I would have sent you my chart. And on the chart, there's a 100 EMA and a 200 EMA. Now, those are just moving average of the last 100 days or weeks, or 200 weeks moving average, which is approximately 4 years. So, if you want to identify the trend using EMAs, it's very simple. If the price is above both EMAs, then it's an uptrend. If the price is below both EMAs, then it's a downtrend. Super simple, don't need to make it complicated at all. Now what's important though is the trend changes from time to time. And usually a good buying opportunity happens when a downtrend changes from an uptrend. And this happened precisely when the price crossed over the 200 EMA, which is the longer and the more stable line. So when the price crosses over, this creates an opportunity. But now, just want to let you know, these opportunities only happens like 10 or 5% of the time. So 95% of the time, I'm already trading an existing trend. I don't trade change in trend because the chance of a trend changing is really low. I only trade with the trend and wait for a dip, and I only buy. And it's very important because the market has a natural tendency to go up. So when you're looking at a change in trend, it is very exciting. But then you also got to remember, what happens if it is not real? What happens if it is not really a change in trend? And that's when most people get screwed over. Because when you look at an uptrend, there's probably 5 to 10 waves before the trend actually changes. So that means if you try to bet each top, it is a change in trend, which is the final top, you're going to lose 9 out of 10 times. So that means if you're betting the downtrend and how the downtrend changes to an uptrend, let's say the downtrend has 10 waves, 9 out of 10 times, you're going to lose. So it's way better to bet with the trend and invest when it is at a dip than to invest against the trend and hoping that the trend itself will turn, unless you're really confident about your research. And that's it. That's how simple it is. In the next video, we go deeper into EMAs and how you can use EMA as support and resistance as well, and how some of the best support and resistance are around where the EMAs are. Good luck. Leave me a comment below if you have any questions, and give me a like or subscribe or a share. And yeah,